All right, let's dive right in. Today we're hunting for a very specific clue that's hidden in the charts. It's a single candlestick that can hint a market is about to completely change direction. We're talking about the inverted hammer. I know, it sounds a little too simple, right? How can one tiny shape, something that forms in just a single trading session, possibly suggest that a long, painful downtrend might finally be over? Well, that's exactly what we're here to unpack, because this little pattern tells a really fascinating story about the invisible battle raging between buyers and sellers. So where do we actually find this thing? Well, with candlesticks, context is everything. You can't just find it anywhere. We are specifically looking for this pattern right at the bottom of a downtrend. That's where it acts like a flare in the dark, hinting that the bulls might finally be waking up. Now, the key phrase here, the one you really gotta remember, is bullish reversal. This pattern's whole job is to flag that the downward momentum, all that selling pressure, could be running out of gas. Think of it like the market whispering to you, hey, the sellers are getting tired and the buyers are just starting to dip their toes in the water. Okay, so if you're gonna spot an inverted hammer out in the wild, you have to know its anatomy. Every single part of this candlestick shape tells a piece of the story, so let's break it down piece by piece. The checklist for this is super specific. First, and I can't say this enough, context is king. It has to show up after prices have been falling. Next, you're looking for a small little body down at the bottom. But the real star of the show, that's the long upper wick. It needs to be at least twice as long as the body. And finally, notice there's barely any shadow or no shadow at all at the bottom. Now, it can be red or green, but honestly, a green body is a much stronger signal that the buyers are starting to mean business. You know, this isn't just a random shape on a screen. It's a psychological snapshot. This one little candle captures a fierce minute-by-minute battle between the bulls and the bears. So here's how that fight plays out. At some point during the day, the buyers make this really bold move. They push the price way, way up. And that's what creates that long upper wick. But the sellers see this and they fight back hard, slamming the price right back down to where it started. So who won that fight? Well, on paper, it looks like the sellers did. But the real story here is that the buyers showed up with some serious, unexpected force. That attempt to rally, that's the first crack in the seller's armor. And this brings us to a really critical point. And honestly, it's a common trap for new traders. The inverted hammer has a few lookalikes. And if you mistake them, you could make some really bad decisions. It all comes down to where it shows up and which way it's pointing. Let's clear this up right now. The inverted hammer's evil twin is the shooting star. It's the exact same shape, but it appears after an uptrend, and it signals a bearish move down. Then you've got the regular hammer, which is kind of like its cousin, but its long wick points down, not up. And a doji? That's just pure indecision, the market shrugging its shoulders. See? Where the pattern appears and which way that wick points, it changes absolutely everything. Okay, I need you to listen very carefully to this next part. An inverted hammer is a hint. It is a suggestion. It is not a guarantee. Acting on this signal all by itself is a classic mistake. Before you even think about doing anything, you need confirmation. So, how do we get that confirmation? We watch the very next candle like a hawk. What you want to see is a strong, green, bullish candle that closes above the high of our inverted hammer. And you know what's even better? If that move happens on higher trading volume, that shows real conviction from buyers. Now, if this whole setup is happening near a known support level, well, now you're not just looking at a signal, you're building a really strong case for a reversal. All right, theory is great, but let's get practical. How does a trader actually take this information and turn it into a concrete plan? Let's put this knowledge into action. Here's the playbook. Step 1, you spot a valid pattern in the right context, a clear downtrend. Step 2, you wait. You have to be patient and wait for that confirmation candle we just talked about. You need the market to prove to you that the signal is real. It's only after you get that confirmation that you'd even consider entering a buy position, usually right as the price breaks above the high of that inverted hammer. But an entry plan is only half the strategy, and it's the less important half. You absolutely, positively must have a plan for your exit, especially for when you're wrong. This part is completely non-negotiable. So your exit plan has two parts. First is the stop loss. That's your safety net. You place it just below the low point of the inverted hammer. If the price drops and hits that level, it means the signal failed and you get out with a small, manageable loss. The second part is your profit target. That's your goal. You might set this at the next major resistance level, or just make sure that your potential reward is at least twice as big as your potential risk. So let's just recap the big ideas here. The inverted hammer is a bullish reversal pattern you find after a downtrend. It's a sign that buyers are just starting to test the waters. But remember, it's only a clue, not a command. Confirmation is absolutely essential. And this signal, like all signals, works best when you combine it with other tools and other forms of analysis. And that really leaves us with this one final thought. Viewing any single pattern on a chart as a sure thing is a massive trap. The real skill, the art of trading, is seeing it as one piece of evidence in a much larger investigation. So the question to ask yourself is this: how are you going to take this powerful clue and combine it with everything else you know to make smarter, more informed decisions?
Yeah.